Hello everyone, welcome to the market opening bell for Tuesday, September 30, your 10-minute guide to the stock market. Hong Kong stocks opened higher and maintained gains on Monday. The Hang Seng Index opened up 194 points at 26,322, which was also the day's low. It peaked at 26,688 in early afternoon trading, up as much as 560 points and closed at 26,623 points, rising 495 points or 1.9%. The Hang Seng China Enterprises Index rose 151 points or 1.6%, closing at 9,454 points. The Hang Seng Tech Index gained 129 points or 2.1%, closing at 6,324 points. Total market turnover was 309 billion Hong Kong dollars. Southbound trading turnover was $148.8 billion, with a net southbound outflow of $1.654 billion. Among them, net buys include Alibaba at 3.557 billion, Tencent at 1.494 billion, Xiaomi at 995 million, Li Auto at 729 million, SMIC at 378 million, Kuaishou at 371 million. Net sales include Tracker Fund at 5.783 billion, China Mobile at 815 million, Meituan at 198 million, XTAL Holdings at 194 million, Hua Hong Semiconductor at 115 million. According to statistics, southbound funds have been net buyers of Alibaba for 27 consecutive days, totaling 75.354 billion Hong Kong dollars, and net buyers of Tencent for 4 consecutive days, totaling $6.048 billion. Technically, the Hang Seng Index is holding above 26,000 points for now, with short-term expectations of volatility between 26,000 and 27,000 points. China's A-share indexes opened higher and trended upward. The Shanghai Composite closed at 3,862 points, up 34 points or 0.9%. The Shenzhen Component rose 270 points or 2.1%, closing at 13,479 points, and the Chinex index gained 86 points or 2.7%. The combined turnover of Shanghai and Shenzhen markets was 2.1582 trillion yuan. The renminbi US dollar central parity rate was adjusted up 63 points to 7.1089 per US dollar. Xinhua News Agency reported that the Political Bureau of the CPC Central Committee held a meeting on Monday to discuss the formulation of major issues for the 15th five-year plan for national economic and social development. The meeting was chaired by CPC General Secretary Xi Jinping. It was decided that the fourth plenary session of the 20th CPC Central Committee will be held in Beijing from October 20 to 23rd. The National Development and Reform Commission stated that the mainland economy still faces numerous risks and challenges, and macro policies will be strengthened appropriately and timely. The National Bureau of Statistics announced that in the first 8 months of this year, industrial enterprises above a designated size achieved a total profit of 4.69 trillion yuan, up 0.9% year-on-year. In August alone, profits of these enterprises grew by 20.4%. Over the first 8 months, operating revenue reached 89.62 trillion yuan, up 2.3% year-on-year, with operating costs of 76.7 trillion yuan, up 2.5%. The profit margin on operating revenue was 5.24%, down 0.06 percentage points. By the end of August, the asset liability ratio of these enterprises was 58%, up 0.2 percentage points. Xiaomi bucked the market trend, falling 2% to close at 53.55 Hong Kong dollars. Noted analyst Ming Chi Kuo stated that recent industry surveys show a significant 20% downward revision in Xiaomi 17 series, shipment targets, originally around 10 million units. Without more aggressive pricing or marketing strategies, total shipments may fall below the 8 million units of the Xiaomi 15 series. The downgrade is mainly due to weaker than expected demand for the standard Xiaomi 17, initially projected to account for 50 to 55% of the series, but actually only 15 to 20% after launch. While orders for the Pro Max and Pro models have increased, they cannot offset the cuts for the standard model, leading to an overall 20% shipment reduction. Kuo added that one reason for the standard model's underperformance is the stronger than expected performance of the iPhone 17 standard model in China. From a competitive perspective, Xiaomi faces two major challenges in China's high-end market in 2026. Apple's iPhone has passed its worst period in China, with new competition from the iPhone SE in first half 2026 and a new high-end iPhone series in second half. Additionally, Huawei's high-end model demand has been weaker than expected due to Harmony OS compatibility issues, expected to improve in 2026. Sport Gold continued its ascent, breaking above 3,830 US dollar per ounce to a new high, rising over 70 US dollar intraday. Year-to-date, gold has gained nearly 46%. The surge to record highs is driven by safe haven demand due to 1. Russia's large-scale drone and missile attacks on Kyiv. Second, close attention to a closed-door meeting of U.S. military leaders in Virginia. Third, investor preparations for a potential U.S. government shutdown on Wednesday, which could delay the release of Friday's non-farm payrolls report. And four, growing expectations of further Federal Reserve rate cuts, providing potential support. Hong Kong gold stocks rose collectively from September 24th to 25th. Brands like Chow Tai Fook, CXJ Jewelry, and Chow Sang Sang began or planned price hikes for gold jewelry. A Chow Tai Fook spokesman confirmed that fixed price gold products will see gradual increases starting in October, with some popular items potentially rising 30 to 40%, prompting customers to pre-order ahead of the hikes. Mart launched this Star People Delicious Moments series, freshly baked cookie plush blind box, at 10 p.m. last night, priced at 59 yuan per unit or 354 yuan for a box of six. The series sold out quickly on secondary trading platforms. A full box, 6 units, is listed from 400 yuan to over 1,000 yuan, making it the highest premium series recently, surpassing the mini Labubu blind box. The Star People Delicious Moment figurine blind box series, with 12 regular designs and one hidden rare design, is also highly sought after, with popular designs including Star Candy, Macaron Moment, and Lucky Pudding. On secondary platforms, a set originally priced at 828 yuan is resold for over 27% higher at 1,055 yuan. Three new stocks will be listed today, according to Phillip Mart trading platform. Zijin Gold International, stock code 2259, closed in the grey market at 108.4 Hong Kong dollars, up 51.4% or 36.81 from its IPO price. Excluding fees, a 100-share lot yields a paper profit of $3,681. High Pine stock code 2583 closed at $85.2, up 187.8% or $55.6, with a 100-share lot yielding $5,560. Patio Connect Technology stock code 2889 closed at $136, up 33% or $33.77, with a 20-share lot yielding $675.4. US stock market shows mixed gains. The Dow Jones Industrial Average briefly fell by about 100 points but closed up 68 points a 0.2% gain at 46,316 points. The S&P 500 rose 17 points, up 0.3%, closing at 6,661 points. The Nasdaq gained 107 points, up 0.5%, closing at 22,591 points. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, rose 173 points or 2%, closing at 8,703 points. AI chip stocks performed strongly, with Nvidia up 2.1% and Micron up 4.2%. Tech stocks showed mixed results. Amazon rose 1.1%. Tesla and Microsoft each gained 0.6%, while Apple fell 0.4%. Intel dropped 2.9%. Video game company Electronic Arts announced it will be taken private in a $50 billion all-cash deal by Saudi Arabia's public investment fund, Silver Lake Capital and Affinity Partners. Its stock rose 4.5%, adding to Friday's gains for a two-day cumulative increase of 20%. OpenAI's integration of ChatGPT's instant checkout feature for Etsy drove its stock up 15.8%. On the economic data front, U.S. pending home sales in August rose 4% month on month, the largest increase in 5 months, rebounding from a 0.4% decline the previous month and reversing consecutive declines. Reports indicate that a U.S. government shutdown could lead to a news and data blackout in the U.S. Department of Labor, including the critical jobs report set for release on Friday. Our stock pick today is Shanghai Electric, stock code 2727. Shanghai Electric is primarily engaged in the design, manufacture, and sale of energy equipment, including nuclear power equipment, energy storage equipment, coal-fired power generation and supporting equipment, gas-fired power generation equipment, wind power equipment, hydrogen energy equipment, photovoltaic equipment, high-end chemical equipment, and providing grid and industrial intelligent power supply system solutions, and industrial equipment, including elevators, large and medium-sized motors, intelligent manufacturing equipment, industrial basic components, industrialized construction equipment, and integrated services such as energy, environmental protection, and automation, engineering, and services. In the first half of 2025, the group achieved new orders worth 109.8 billion yuan, including 60.04 billion yuan in energy equipment, of which 20.08 billion yuan in coal-fired power generation equipment, 6.77 billion yuan in nuclear power equipment, 13.9 billion yuan in wind power equipment, and 7.46 billion yuan in energy storage equipment, and 22.82 billion yuan in industrial equipment, and 26.95 billion yuan in integrated services. The group actively seizes opportunities in national energy policies, serving the construction of new power systems. In the nuclear power sector, it has mastered key equipment manufacturing and inspection technologies. In the coal-fired power generation sector, it continues to focus on the three transformation linkage market for coal power, maintaining the global record for the lowest coal consumption in coal-fired power units. In the gas turbine sector, the group is the only domestic supplier with mature full lifestyle supply and service capabilities for heavy-duty gas turbines. In the wind power sector, Shanghai Electric Wind Power Group, a subsidiary, has leading domestic capabilities in wind turbine design and manufacturing, building China's largest offshore wind power sample database and creating several benchmark offshore wind power projects. Through technological innovation, product diversification, and industrial chain integration, it has developed an onshore product matrix covering 1.25 to 11 megawatt, addressing various complex terrains. In the energy storage sector, the group is actively developing technologies such as compressed air energy storage and flow battery energy storage. building a collaborative ecosystem for diverse energy storage industries and providing multi-scenario energy storage solutions. In the industrial basic component sector, the group's blade business has expanded from traditional coal-fired steam turbine blades to aviation, aerospace, and gas turbine blades, upgrading from energy blades to high-end products such as aviation blades, critical core components, and hot-end components, becoming a leading manufacturer of key components in the two-machine aviation and gas turbine sector. In the aviation assembly manufacturing line sector, the group leverages its extreme manufacturing capabilities and integrated equipment strengths to provide safe, controllable, and intelligent solutions for high-end manufacturing users, such as aircraft manufacturing and aero engine production. In the robotics sector, the group adopts a geo-driven approach of independent R&D plus ecosystem collaboration, initially establishing an industrial chain covering industrial robots, specialized robots, and intelligent robots. Recommended buy price 3.85 Hong Kong dollars, target price $4.1, stop loss price $3.65. I do not hold the aforementioned stock.